Welcome to Financial Health, a 5-minute conversation with Jason Weier of Weier Wealth Management, focusing on your current and future financial goals. This is Financial Health on WOMT.
Welcome to Financial Health here on WOMT. Jason, for the second week in a row, you're not even by the microphone.
Got to do your introduction. I know I got 8 more seconds to check my email.
I know, but
check the market. You're
distracted. It's fine. It's fine. It's WOMT.
Just trying to work, do my job. You're trying to do your job.
12:40 a.m. 107.9 FM, and we're streaming to WOMTradio.com. Jason Weier, always a pleasure having you in the studio.
Thank you.
It's good,
It's good to see you.
It's good to see you too. You're a worker, man, and that's why I respect you. And today we're going to divert a little bit from the book.
We had enough of the book, didn't we?
No, absolutely not. We will be revisiting the book, believe me. But I actually heard you talking the other day with somebody else about something that seemed very elementary to me. It started with ABC.
ABC, and then that is elementary.
And then it kind of went a little weird from there. I think you skipped a couple. So what was it?
The formula. I get where you're going with this one.
Okay, there it is.
Do you remember the whole formula?
ABC. There was a P.
P and
what's the
T?
Very,
very close.
Okay, all right.
Good
ABC,
score.
P, and T. All right,
yes.
Not bad.
Yeah.
Not bad. So, Jason, what is this formula, and what exactly is it used for?
Sure. Great question. So it is the ABCs, we'll call it, but it's more so of why work with a financial advisor. Hopefully us, but any financial advisor. It comes down to our job, our role, and if you think of the ABCs, it's number 1, or letter A, annual rebalancing. So I don't know, I'm not going to go in details yet, but
okay.
A, annual rebalancing. B is behavior mistakes. We've talked a lot
about those. Yep.
Behavior mistakes. C is the cost of investment management or investment-only management, so cost of investment management. P is planning costs and ancillary services.
Okay.
Lastly, T for tax-smart planning and investing. Where do we go from here?
Okay, so we obviously have hit the B many a times on behavior mistakes. We've talked about everybody's risk tolerance and obviously the psychology behind a lot of this. So I think we could skip over the B. The A, the annual rebalancing. So is that...
Do you know what that means when we say that phrase, that terminology, annual rebalancing?
So it brings me back to last week's conversation about location, and like making sure that your portfolio is not necessarily one-sided.
There you go.
It is a balanced portfolio that is benefiting you in the long run. It's making your money work for yourself. Itself.
To put some more context to it is, let's say, for instance, we start as a 50-50 portfolio, meaning half in the stock market, half in the bond market or fixed income. So it's a 50-50 investment. If you think of the last 3-4 years, the market's gone up, if you haven't noticed, and maybe that original 50-50 grew to be a 60-40, meaning that now the market, stocks, went from 50% to now 60% of your portfolio, meaning that your risk is higher.
And it's just not balanced anymore.
And it's not balanced, which means you're taking more risk than you thought you were or that you intended to take 3 years ago. And that means risk comes potentially losses then.
Of course.
So trying to keep those balanced now.
Interesting. But that I feel like is something that should be common sense, but to a lot of people it's not.
Let me tell you the roadblock on what causes the inability to practice that theme is that it's that B, that behavior. Because if you think of it, if the stocks are going up and you want to sell those, who wants to sell something that's doing well?
Exactly.
So it's counterintuitive, Ian. But it's discipline. Discipline's never fun. It's not a great word, but that's what my job is discipline. So to rein in those gains, take some gains off the table, and then rebalance that into something that in this position might be losing money. But that's how you keep your portfolio balanced and keep your risk level in line with what you wanted it to be.
Exactly. Jason, we're running out of time, and we only hit A and B, so we will definitely be going through the rest of this formula.
The ABCs next time.
Oh, my gosh. We haven't even hit P and T. Jason, if anybody has any questions about Weier Wealth Management, this formula here, your book, what's a good way to reach out to you?
Yeah, 920-242-9470. Website is Weier, W-E-I-E-R, WeierWealthManagement.com. Check us out on Facebook, too.
Awesome. Jason, I'll chat with you next week. It's WOMT.
Securities offered through Advantax Investment Services, member FINRA SIPC. Investment advisory services offered through Advantax Advisory Services. Insurance services offered through Advantax Insurance Agency. Views and opinions presented in this podcast are those of Jason Weier and not of Advantax Wealth Management or subsidiaries. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. Performance reference is historical and is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. This is a hypothetical example. This is not representative of any specific investment advice. Your results may vary.
Financial Health is heard every Monday at approximately 11:20 with Jason Weier of Weier Wealth Management. Learn more online at weierwealthmanagement.com. You're listening to WOMT Radio, a Sea Hafer broadcasting station.